economists largely expect the South African Reserve Bank to hike interest rates by 25 basis points later today. And that's as the country battles surging food, fuel and electricity prices. To unpack some of the issues facing the Monetary Policy Committee this morning, we're joined by an economist from KH Research Equity Partners. That's Ndumiso Hadebe, who joins us via our video link this morning. Ndumiso, it's great to have you with us on the program. Sure, there's pressure from all sides on the South African consumer this morning.
There is indeed significant pressure, Michelle, particularly because the anticipated market consensus on a repo rate increase from the South African Reserve Bank today is as a consequence of a significant reduction in the repo rate in order to support the recovery towards the COVID-19 pandemic in South Africa, in order to create further relief to consumers who have perhaps debt within their financial or household portfolios in this instance. And this is of particular, will certainly relate at a more pronounced level to consumers who have unsecured debt. So one of the options that consumers do have or have had in this instance is that if you had secured debt in the instances of a vehicle that has been financed or a home that has been financed by the banks, they do have the option of actually fixing that interest rate for a certain period of time, and then after some time is reviewed by the bank in terms of whether or not they would like to fix that interest rate. But however, for unsecured credit, for instance, such as credit cards and loans and so on, there isn't that option to be able to fix that interest rate. And that's where we're more likely then to see the interest rates then be affected in that instance. And of course, given the surging prices of oil, which of course affects us as consumers on the pump, this will permeate in terms of food inflation that we've seen in the headline consumer inflation number that was reported yesterday, that remained unchanged at 5.7%. But of course, in the near term, we anticipate that to be to significantly increase unless there is some form of intervention from the South African government in this instance to ameliorate that kind of increase where food inflation is concerned.
You talk about the Ukraine crisis and the impact it will no doubt continue to have on South Africa. Talk to us about just how it's going to impact particularly the inflation trajectory in our country.
So there are two pictures here that, quite interestingly, we are able to contrast this against. You would remember, Michelle, that during the hard lockdown period, there was a time where the price of Brent crude oil was significantly low, to a point where it was in the negative territory. But of course, as consumers, because we weren't traveling up and down, we were based in our homes, we weren't necessarily traveling as much, and so we didn't feel it as much. And of course, for transporters of goods and services, such as farmers, of course, that benefited us quite significantly, and inflation was relatively within the midpoint region that the Reserve Bank targets in this instance. But now we've seen a situation where the price of Brent crude oil has exceeded over $100 a barrel, which has been trading at around $120 a barrel quite recently, which will permeate in terms of affecting the price of petrol, which of course farmers and traders of goods and services in the purchasing of transportation of those goods and services to where we actually purchase them at retailers and so on, that will certainly spike up the price of those goods and services. And as a consequence, it means that we will not only be paying more at the pump, but we'll also be paying more for the goods and services that we are paying for on a day-to-day basis. Quite interestingly, though, this is also at the back of a strengthening rand, which is also has been associated with a global risk aversion in terms of where investors are allocating their capital, but of course in improved fiscal metrics on South Africa's side because of how we've allocated the revenue windfall in the previous budget to ensure that we're able to improve our debt to GDP ratios. In addition to that, South Africa does certainly have what is perceived to be a sound monetary policy, and of course in this instance we've also seen that the trajectory of how South African fiscal policy is being consolidated in this instance is somewhat along the lines of what is perceived to be much better emerging market assets in this instance. Hence, we've seen that the South African rand to the dollar exchange has dipped it below the 15 rand for a dollar in this instance.
So 25 basis points, that seems to be the consensus that analysts are saying will be the announcement this afternoon. What are the chances of a 50 basis points increase?
So I think the South African Reserve Bank in this instance, I would not anticipate a 50 basis points increase, particularly because I think there would need to be quite a significant justification for that. This is particularly because this is also taken into account or at the backdrop of the significant high unemployment levels that we have in South Africa, but also the poverty rates that are also existent in the South African case. So I would think that the South African Reserve Bank would be quite measured in how they increase the repo rate pronouncement today in order to ensure that it is not a significant increase that would adversely affect the South African consumer at the back of all of these price increases that the South African consumer faces in terms of their household consumption.
Yeah, absolutely. So that announcement to be made by Reserve Bank Governor Lesetja Kganyago at 3 o'clock this morning. And, of course, you can catch it live right here on Channel 405. Thanks very much indeed for giving us some analysis on all of the issues. Ndumiso Hadebe is an economist at KH Research Equity Partners. Thanks again.